Okay, good morning and welcome back everyone to our thematic investment series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we're here to talk about the future of water because we usually don't think of water as a commodity. We think of every other commodity like oil, gold, silver, but arguably water is one of the most important commodities for everyone. So today I want to talk a little bit about this commodity that we usually don't think of very often, why it's so important to the future of our economy or rather the growing global economy, and what technologies and companies we see as opportunities going forward, especially with the growing population we see in the world and the infrastructure spending that we expect to find over the next 3 to 4 years. So before we get started here, what we're going to discuss is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So we'll take a look at the broader water industry to start off with, just to understand um, the the landscape and the challenges that we face from a macro perspective, taking a look at what are the primary challenges that come with the water industry and what opportunities we currently see for sustainable water. Now, water comes in many different shapes and forms in terms of the types of companies that you can potentially invest in. We'll talk a little bit about the type of water stocks that we'll be looking at, taking a look at both the technical and fundamental analysis of these types of companies, and then opening this up for Q&A here at the very end. But the primary question that I want to help investors answer from today's session is really, what are the primary investable themes for water treatment and infrastructure companies over the next 5 years? And just to be clear, when we say water, we're not referring to bottled water companies. We're talking about water infrastructure companies, companies that provide utilities, companies that provide water treatment technologies, those types of water desalination type companies. Those are the types of companies we are looking for. So my name is Tony Zhang. I'm the chief strategist here at OptionsPlay, and I want to share with you our industry research, our technical research, and our fundamental research on the companies that touch the water space. So let's talk a little bit about water as a scarce commodity, because again, we don't think of water as a commodity because we don't trade it like oil or silver or gold. But again, it is probably arguably the most important commodity of our lives. So the reality here is that we're facing scarcity of as water as a scarcity in many parts of the world, including the United States. Now, granted, not every part of the country has water scarcity issues, but there are certainly places, for those of you that live in California and the West Coast, water scarcity is a far bigger problem than it is on the East Coast. But this is largely driven in the US based on climate change. But in the rest of the world, water as a commodity or scarcity of water comes usually from population growth. We're expecting about another 22 to 34% growth in population by 2050. And 47% of the world, almost half of the world, lives where at least 1 month out of the year they face water scarcity issues. So this is a growing problem as the population continues to grow on Earth, and this is one of the challenges that we must solve in order to continue to grow. And if you look at the infrastructure spending over the past 30, 40 years, we've seen a significant decline in spending on water infrastructure. That's what's leading to a lot of the water scarcity issues that we're starting to see, not only here in the US, but around the world. And that lack of spending in infrastructure is causing droughts that we have seen in California, in South Africa, in many parts of the world. And when we look at that lack of infrastructure spending, and we look at the infrastructure projects that are being put on into plan right now, that is the opportunity we currently see here, with at least in the US North American market, as well as in some of the Asian markets. But two other major contributors to water scarcity is deforestation and climate change. So deforestation and climate change too are very closely tied to each other. From the perspective of deforestation, changes the movement of water in the atmosphere, and this has caused major shifts in precipitation that has led to some drought, as well as climate change. Natural disasters has significantly reduced the access clean drinking water. So those are some of the things we're going to explore here during today's session. But the primary challenge around water scarcity is simply just population growth. Even though we've seen a decline in population growth from 1968 to where we are today, from about roughly 2% growth per year to about just about 1% growth we have seen in terms of population year growth, our expectation is still to grow from 7.7 billion to 9.7 billion, so additional 2 billion people in the next 30 years. And then by 2100, we're looking for about almost just shy of 11 billion people. So this population growth is really what's driving our need for clean water, both from an agricultural perspective as well as just access to clean drinking water. So the projected water consumption right now is forecast to grow. This is in a kilometer cubed. We measure water consumption in kilometers cubed in terms of units of measure. So about from 1050 to 1200 in terms of growth over the next 5 years or so, and then from 2025 to 2040, another 250 kilometer cubed in water consumption. This is just for the agriculture sector to feed the growing population. So the water consumption necessary that we need to go forward is quite substantial. And right now, the infrastructure that we currently have cannot support this amount of need in terms of water, access to clean water. And this is not just a problem for developing nations. A lot of investors have this view that water scarcity is something that largely is a problem in the Middle East. It's largely a problem in Africa, and specifically the countries near the equator. But in reality, there are plenty of developed nations that actually face some very strong water scarcity issues, including the United States. Now, most of that water scarcity in the United States is located on the West Coast. Those of you that are in California are more than aware of this. We've had multiple years of droughts. Many people in California have not been able to water their lawns for many years. So this is an issue that not only faces the developing nations, but also many developed nations as well. And India and China are probably the two that have the most, I would say the highest amount of water scarcity needs over the next 20 years from a developed nation perspective. But Australia has the same issue as well now, but the United States is also one. And this is really where a lot of investors feel that these investment opportunities are only in these developing nations. The reality is that there are plenty of multinational companies based in the US, in Europe, in Australia that actually solve these types of problems that are investable by investors through publicly traded companies today. So those are the things that we're going to talk about here. And when we talk about these types of companies, we're predominantly talking about water that can be created sustainably. And that's a little different than water desalination plants, and those are also potentially investable technologies. But water desalination at the moment is still extremely energy intensive, and we don't feel that that is a long-term solution for the water scarcity issue. So what we're focused on is more of the what we call sustainable water. So these are basically ways to use water more efficiently. Better irrigation systems for agriculture, monitoring groundwater extraction, drainage solutions that allow us to reutilize or recycle the water that we currently have in our system, and also just generally speaking, recycling water, improving the process at which that we reduce impurities and then allow water to be reused. That's a lot of the municipal water solutions that we currently have in the US are what we would consider more sustainable water solutions, meaning we're not draining the oceans of salt water, removing that salt water to create fresh water, where you largely recycling water, and making that process more efficient is the technologies that we want to take a look at for this particular investable theme. So when we look at the aging infrastructure in this particular country, one thing that really stands out is the fact that we have significantly reduced the amount of federal spending on water and water waste utility infrastructure since the 1980s. We peaked at about $16.8 billion in spending per year in the 1980s, and we are down to just 4.4 billion in terms of water infrastructure spending. So this is a trend that we see pretty much around the world. And this lack of federal spending or lack of spending on water infrastructure has caused a lot of aging water utility companies, water infrastructure, and this is causing some of the droughts that we have seen around the world, whether we're looking at some of the things that we've seen in California. South Africa was pretty bad a couple of years ago. This is all due to just not spending enough money on water as an infrastructure or water as a commodity or as a resource. Because many places around the world, you turn on the tap, water automatically comes out. It's not something that most people think about very much in terms of requiring future spending on. So this is something that is, in our opinion, a opportunity, because our expectation is that going forward, the need for water infrastructure spending is only going to increase as we realize that global warming, aging population, and growing population causes a substantial need for further water, and that's what causes the opportunity that we see here in the market. Now, one important thing to look at here is understanding the economics of utility companies, specifically in the water industry. And the reality is that, and I'm not going to spend my time reading you this whole slide, but I will provide these slides for everyone to be able to look at on your own with the recording. But the economics of utility companies is not on a free market system, and this is so that you as a consumer can access utilities at what the government consider as a fair price, and is not the same as, like, for example, electricity, which I think many people are learning a lot about the electricity market after what's happened in Texas a couple of weeks ago. But water utilities is largely a regulated industry, and which means that the upside revenue for water utility companies are relatively capped. And what this means is that for utility companies to generate revenue and increase revenue, the main way to go about doing so is by building on infrastructure and continuing to build more water treatment plants. They can't really make those water treatment plants more profitable. They can certainly reduce costs and increase their margins there, but they can't charge more for water because it's regulated in terms of the price that they can charge to consumers. So what that means is that there is a artificial cap on how utility companies can generate revenue. And this is an important thing to understand when you're investing in water utility companies. So what we really focus on when we look at water utility companies is more on the growth of infrastructure rather than the specific economics of each individual water plant. But when we look at potential investment opportunities, the major opportunities are actually in places like China, India, Africa, and parts of Asia. That's where we see the most demand in terms of projected increase in annual water demand. And now this spans multiple sectors. Predominantly, we're looking at municipal and domestic needs, largely serving water utility companies. But you also have a lot of industrial needs out of China. Specifically out of China is the biggest grower here. India and China account for a very large portion of the growth in industrial demand for water. But in terms of municipal demand, India actually surpasses China because population growth in India is stronger than in China. And that's why India, sub-Saharan Africa are the two strongest ones by the rest of Asia, and then United States before China, because again, China's population growth is not as strong, which is why their municipal demand is not as strong for the rest of the world. But that's really where, when you're investing in these types of companies, exposure to these four areas is really where you want to find exposure in the companies that we're looking at. And so we'll take a look at that when we look at the specific companies that we're identifying here, what type of exposure they have to these geographic areas, because that's going to help us determine which companies are potentially most attractive when it comes to their ability to grow or their ability to supply the needs for water demands in those particular companies. And the one thing that really provides us the investment thesis here is the fact that the number of digital water companies, and what I mean by digital water companies are companies that provide solutions to water utility companies, whether that's monitoring, whether that's mostly around the technologies to monitor water utilities, monitor the efficiencies of water utilities. This has seen a substantial growth since 2000. The number of firms that provide these types of technology solutions to water utility companies have grown substantially since 2000. And that is great for the when we talk about sustainable water, because a lot of the gains that we have in terms of efficiencies for sustainable water has come from technology resources and technology companies that have provided utility companies the tools to become more and more efficient. And this has increased margins. If we look at some of the companies that we'll be taking a look at in terms of water utilities, a lot of their focus is on efficiency, making the cost of running these plants cheaper by relying on technology more and more. So these are some of the opportunities that we see here in the broader market. So we're going to cover a pretty wide scope of the type of companies that service sustainable water, but we're going to start off with the utility companies. So we'll start off with the largest water utility company in the United States, American Water Company. They service about 14 million customers across 46 different states and Canada. They are by far the largest in terms of market cap, $28 billion in market cap. They just did about $3.78 billion in revenue over the past 12 months. And they have a very interesting strategy because, as I was telling you before, the way that water utility companies work is that it's a regulated market. It's not a free market. They can't charge based on the cost of water. They effectively have pre-negotiated rates with municipalities, and their growth comes from acquiring or building out infrastructure, not from being able to charge more for the water utilities that they provide. So the strategy of American Water Works is very interesting, and it's quite, I would say, distinct from any other water utility companies, is the fact that their strategy is simply acquiring smaller municipal water plants, increasing their footprint by acquiring smaller water plants. So that's how they've been able to grow themselves to the largest of the major water utility companies. They sell these to both residential, commercial, and industrial customers. And they've seen some pretty strong revenue growth expected for 2021, 2022. They've acquired quite a few new water utility companies in the last few years. They've added quite a few new customers, and they've also started to acquire utility companies in other sectors to compete with some of their other smaller competitors at the moment. But by far, the strongest are the largest of the water utility companies, but also from a relative strength perspective, American Water Works trades like no other utility company. If you look at this chart, which is a weekly chart, it trades more like a growth company than you would expect from a utility company. Now, the stock did take a hit over the past couple of weeks with the rise in interest rates, as all utility companies have. This is a weekly chart that we have here on the left-hand side. So for those of you that are saying that this doesn't look like the daily chart, that's correct. This is a weekly chart. Whenever we do these thematic investment series, we take a longer term chart because these are longer term investment opportunities. But American Water Works stands on its own as a water utility company. Strong relative strength, Yes, it has taken a hit here over the past couple of weeks because of the rise in interest rates, but that also can be seen potentially as an opportunity as it has pulled back here to this 140, 145 support level here. There is some potential opportunity, in my opinion, for a entry here, especially as utility companies still maintain a fairly strong dividend yield on these types of companies. And when you have a strong move here to the downside over the past few weeks, that is a potential opportunity, in my opinion, to look at some of these water utility companies. American Waterworks did get a little bit expensive. It certainly trades at a richer valuation than most of the other water utility companies, but they have a very different strategy of simply acquiring as many of these small plants. And that's why they serve 46 different states, because the next largest water utility company, Essential Utilities, only has 3 million customers in 9 states. So American Waterworks just is head and shoulders above the second largest water utility company, which is Essential Utilities. And they recently named themselves the Essential Utilities because they started purchasing gas companies, or so they started expanding their utility services beyond just water into gas as well. And this is why they've recently renamed themselves to Essential Utilities. But this is the second largest water-based utility in the US. They have actually stronger revenue growth expected in 2021 versus American Waterworks. As you can see, the chart is clearly not as strong. Trades very similar to most of the other utility companies that we look at. Trades very similar to the utility sector. So this is a more, I would say, traditional water utility company, but I think it's worth taking a look at as well because it hasn't sold off as much as American Waterworks here over the past couple of weeks. It does have a strong revenue in terms of 146 billion over the past trailing 12 months versus 3.78 for American Waterworks, and trades at a slightly discounted valuation to American Waterworks. And the fact that they've diversified now into gas as well, I think also provides a view into this particular company, or as a potential investment opportunity. And they do have quite a bit of infrastructure spend planned out here for the next 3 years. And like I said, the growth in these utility companies comes from spending on infrastructure, building out new plants. When they're building out new plants, that's when they're able to capture new customers. And that's how these companies grow. They can't grow necessarily by simply charging more or they can become more efficient, but there's limited in terms of how efficient these companies can generally get going forward. So with that, then we're going to pivot a little bit to some of the companies that provide the technology or the services to the American utility companies, not just American utility companies, but global water utility companies. At the largest one of these is Danaher. Now, Danaher is a life sciences company. Now they have 174 billion in terms of market cap. That's going to be the largest of any companies that we're going to look at here today. They generate about $22 billion in revenue over the past 12 months. Now, granted, this is a much larger company beyond just water, but they generate almost a quarter of their revenue from the 8 water quality treatment and optimization companies that they have in their portfolio. So these 8 companies that they own in their water portfolio really encompasses the entire life cycle of a water treatment plant, everything from the water treatment itself to the recycling of the water to pulling the water out of the ground. All of that technology, the 8 different companies that they have across the water treatment plants, allow them to provide effectively what are full service solutions to water utility companies. And if water utility companies only need a portion of their technologies, they're able to supply that. And that's what makes Danaher quite unique in this particular space, even though it's not the largest driver of their revenue. They are by far the company that has technologies that can really drive the growth in terms of not the growth, but they supply the technology for water utility companies around the world. And they design a lot of other things. They design medical and industrial and commercial goods products globally, and that's what most people know this company as. But they have about a 30% exposure to those high growth markets that we were referring to below, so referring to before, because a lot of the companies that we refer to may have overexposure here to North America. While we expect North American water to be an important part of the growth here, as I showed you before, the demand for water scarcity or clean water comes from other countries. So Danaher actually has a substantial exposure to some of those companies while still maintaining most of their exposure here in the US. But this is really where they continue to supplement their growth with current acquisitions. And if you look at the stock price, very strong relative strength here over the past few months. It has taken a consolidation. So we've seen a very strong move to the upside, a consolidation. And this is where it's worth paying attention to. We're near the bottom of the trading range. So at the moment, if we don't get a further sell-off in the broader markets, this is, in my opinion, a fairly attractive entry point if during inside of this consolidation range here. We're near the bottom of the range. So even if we're only projecting a move to the top of the range, risk to reward here favors longs. And you have a break below this 215 level here, you would cut your losses and move on. But in my opinion, the risk reward ratio here looks attractive. And if you can manage to get a breakout here above this 250 level, which is in the all-time highs, that is your opportunity for much larger, further upside here when we're talking about a long-term investment. But Danaher certainly is one that you should potentially look at in your portfolio for investments for the future of water. Next, we're going to turn to Ecolab. Ecolab is actually one of the few, I would say, life sciences companies that is fully focused on water. Now, they are a little different from the perspective of their primary customer base is not the utilities, it's not municipalities. They provide water hygiene technology to food services, to hospitality, to healthcare, to industrial and energy markets. So they service the commercial side of water, whichever businesses around the world require clean water, whether it's to beverage companies that need to process clean water. So for those of you that are asking about water bottling, water companies or bottled water companies, the type of technologies that they use to clean that water and bottle are designed and created by Ecolab. So Ecolab is one of the few of these larger industrial names that we're going to take a look at that have almost entirely their exposure to water, while most of the other companies have a portion of their business catered to water services and clean water technologies. Ecolab is almost entirely focused on clean water and water hygiene, but for industrial needs rather than for municipal needs. So it's a little different than Danaher, but they generate $12.4 billion in terms of revenue over the past trailing 12 months, 62.8. This is not revenue, I apologize. This is market cap. So trading at about 4 times sales at the moment. But this is an interesting side of the market because the municipalities at the moment are still mostly concerned about cost in terms of water. The municipalities, generally speaking, their main focus is not sustainability. It's really, we tend to find that it's the commercial side that usually drives the first demands for sustainable, renewable water. And that's really why I think Ecolab is interesting, because they focus on that commercial side of the business. They don't focus on municipals, which generally speaking, their main focus is providing clean water at a relatively low cost. Whether that water is sourced sustainably or not is not their main focus. Versus water bottle companies are likely going to be the first commercial demand that you're going to see for more what we would call sustainable water. So Ecolab, I think, is an interesting one that could be part of your portfolio as a result, not as strong as Danaher if you look at the chart. So this is really one where it's slowly building a base here, in my opinion, above this 210, 215 level, which has been a long-term resistance level just before the pandemic and managed to break above that level. But notice how the stock didn't really sell off as much as the rest of the market, and so far has managed to get back above these levels. So also, again, a somewhat attractive risk to reward ratio, in my opinion, just above this 210, 200 level here for a potential opportunity here to the upside. And again, I think that as we look at demand for sustainable water going forward, it's more likely that that demand first comes from commercial applications rather than municipal applications. So Ecolab servicing that market almost entirely is an interesting place to look, especially given the fact that they have very, very extensive global operations. They actually operate in 170 different countries, including China and India and sub-Saharan Africa and the rest of the Asian countries that we refer to. So exposure to all of those geographical areas and a large exposure to both materials and industrial sectors, which are two sectors that we think are strong contenders for growth here over the next 3 to 5 years. Especially when we look at the infrastructure spending that's expected here in the United States and also globally to revive the global economies after the pandemic. And then what we want to take a look at are some of the engineering firms. So we talk about the sustainable water, whether we're looking at it from an irrigation perspective, whether we're looking at it from a water infrastructure perspective. The major companies that provide this type of service to to governments around the world are these types of massive engineering firms like Jacobs Engineering. Again, most of these names that I'm referring to here today are not household names. It's not like Target or Starbucks or Microsoft. These names are fairly sizable companies, but they're not names that are household names. And that's part of why we like doing this type of research, is because this is the type of companies that we usually don't think about. Many times we may have some exposure to these companies through buying an XLI or XLB. When you're investing in some of these industrial material ETFs, you have exposure to some of these companies, but these are some of the largest companies within those ETFs. So when you're looking at some water ETFs, or if you're looking at some of ESG funds, many times these companies are part of it. You just may not have thought of investing in them directly. So I think it's important to understand what some of these companies do. And Jacobs Engineering, again, with a $15 billion market cap, is relatively small in the grand scheme of things, but they have generated $13.5 billion in revenue over the past 12 months. The thing about these types of engineering companies is that they're predominantly providing what we call professional services. So they're really providing consulting services. And the downside to those types of companies is that they don't trade at very strong valuations. They roughly trade at what they're generating in terms of sales. So they generate $15 billion in sales over the past 12 months. Their market cap's roughly $15 billion. That's a downside, meaning there's not a lot of multiple expansion that you can get from these types of professional services companies because they can't really scale them up, right? Whatever they generate in revenue, that's roughly what they're worth. So that's the one downside to investing in this group of companies or these types of companies. But Jacobs Engineering recently, breaking above this 105 level, which is the pre-pandemic high, it came back to retest this level as support and is now trading to a new all-time high. Jacobs Engineering provides engineering projects for construction and maintenance services for private industry and federal governments around the world. They have a very strong cash position, which is what's interesting about them, and they've been targeting a lot of Chinese acquisitions for infrastructure projects. So, and the thing about Jacobs Engineering is that they span engineering projects well beyond just water, but they do have a fair amount of water projects, especially in China. And following Biden's election, we expect that Jacobs Engineering is actually going to be a pretty big part in the increased demand for services for clean energy, clean drinking water, and just general increase in regulation across environmental contaminants that we expect that the Biden administration will put in place. So Jacobs Engineering, while The larger of the few engineering firms that provide services in this particular area is, at least in my opinion, trading at its fair value and has a pretty large potential for revenue growth here going forward. And the second one we want to point you to is ACM. ACM generates roughly the same amount of revenue as Jacobs Engineering, but trades at a substantially discounted valuation at only about half the valuation. So this is, in my opinion, a similar size company, but trading at a discount to Jacobs Engineering. And recently, the stock price, I think, reflects this discount in terms of valuations and is actually growing quite substantially here. Recently breaking out above this $52, $53 pre-pandemic high, holding that level, and now breaking out higher above that level here. So technically speaking, I think this chart looks strong and trading, in my opinion, compared to Jacobs Engineering at a fairly substantial discount because it generated $13 billion in revenue, but is trading at just an $8 billion market cap versus Jacobs Engineering, same revenue, roughly double that market cap. And this is a company that has very little leverage, and that's part of perhaps why it's trading at a relatively low valuation. It'll be debt-free in about 18 months here. They have very low leverage, but they have a very large exposure to many of the water treatment engineering projects that we're referring to. Seawater desalination included in there, and seawater desalination is a big part of how some of the Middle East, especially countries that have very low energy costs, are dealing with water scarcity. So really, you have to look at the landscape here of how the cost of energy for each company. The higher energy cost companies are the ones that are focused more on sustainable water. The countries with very low energy costs, think the Middle East, like Saudi Arabia, where fossil fuels are extremely cheap, they're relying more on seawater desalination as their primary solution to clean water. But ACM actually has exposure to really all of this, whether we're looking at industrial water, we're looking at hydropower, which is another interesting, I would say, segment, if you will, or intersection between what we discussed last time with renewable energy and water treatment, but wastewater treatment, irrigation. So all of these challenges that we talked about, all the different technologies that power sustainable water, ACM is one of the firms that really provides services across all of them. And the fact that they generate the same amount of revenue as Jacobs Engineering, trades at roughly half the market cap, and has exposure to all of these industries that we're referring to that is going to be a part of sustainable water, I think is worthwhile taking a look at. And the relative strength in the chart speaks for itself. Out of all the charts that we looked at, ACM, in my opinion, looks like one of the most compelling charts from a relative strength perspective. As the market is weakening here over the past few weeks, ACM, considering what it does here right now, is actually continuing to break out here to the upside, speaking towards the demand for this type of technology going forward. So that is why I think ACM, small market cap company, right, compared to many of the ones that we were looking at Danaher with a $160 billion market cap, but in my opinion, smaller company, potentially interesting investment opportunity for water. So with that covers what I wanted to share with you. Oh, actually, sorry, we have one more: advanced drainage system. This is also another interesting one. This is also small cap company, just shy of $6 billion, generated $2 billion in revenue over the past 12 months. So trading at about 3 times sales in terms of valuation, so a little bit more richer valuation than Jacobs Engineering and ACM, but they are an interesting, I would say, niche provider of building materials that are actually designed for the change in climate that we have seen around the world. And this is part of why we've seen this stock grow so much since the pandemic. First of all, just general building across the world has accelerated since the pandemic. And the result of it is actually through the technology that they provide in terms of water drainage systems. And water drainage systems for industrial buildings is a bigger issue as climate change and natural disasters happen at a faster pace. They provide a lot of the technology that allows buildings to be more sustainable and more weather the changes in climate change better. And this is one of the fastest growing companies in this particular space of providing building technologies um, for this issue that we currently see. So water advanced drainage systems, not on anyone's radar, in my opinion, currently at a $6 billion market cap, but generating a fairly strong amount of revenue. And we're seeing some strong revenue growth as well. But it also, if you look at the chart here, the one thing I will warn investors, this is a chart that has ran quite a bit here. So I am a little concerned about the valuation that it's trading at. It's trading at 3 times sales, which is rich for this type of company. Jacobs Engineering, as I showed you before, trades at 1 time sales. ACM trades at half time sales. Advanced Drainage, fast growing company, but trading at 3 times sales. But I think, in my opinion, being a small market cap company, if you see a pullback here over the next few months on this type of company, that could be a potential opportunity for an entry. But I do think at the current valuations, this one is a little rich, but worth taking a look at. So with that, that covers what I wanted to share with you here for today. I hope that this was helpful in giving you a better understanding of water as a commodity and just a thought in terms of how this how this problem is going to be solved by either water utility companies and, more importantly, many of the water technology companies or engineering companies that provide federal governments with the professional services and the technologies to solve the water scarcity problems that is going to be a big part of climate change over the next 20 to 30 years. So with that, at this point, what I'll do is I'll open this up for Q&A if anyone has any questions. Thank you so much, everyone. Nilesh is saying, seems like ACM is in a loss for the last 2 years, right? So many of these companies operate, unfortunately, at a loss, but in my opinion, that's not an issue. So let's look at that. Advanced drainage systems. So advanced drainage systems, I think you have to think of advanced drainage systems as a, so it operated at a profit here in 2018, operated a loss in 2019. If we look at if you look at the last 3 quarterly earnings, Q1, Q2, and Q3 of this year, they were all net profitable and with actually relatively strong margins of around 9 to 11%. So, WMS has, oh, I'm sorry, we're looking at ACM, I apologize. ACM did turn a small profit, I'm sorry, a small loss here, but they did turn a profit here in the first fiscal quarter of 2021, about $26 million. So the way I think about ACM is that it's a fast growing company. They're not as interested in turning a profit here at the moment. I think they're more interested in growing market share, and that's why they spend heavily on their revenues to continue to grow market share. So, the losses are very small. As you can see here, they're relatively small losses compared to the amount of revenue they're bringing in. So for those reasons, I'm not too concerned about these small losses that we're seeing on a stock like ACM. That's a fast growing small company. The advanced drainage system, same thing. The concerns around earnings here, small company, but also WMS, Advanced Drainage Systems, did turn a profit over the last 3 quarters, and this is since the pandemic. The pandemic has really accelerated the demand for their products, especially as building and infrastructure projects have accelerated substantially since the pandemic. And especially with climate change being at the forefront of a lot of property projects, advanced drainage systems provide that technology to allow them to build buildings that can actually deal with changes in climate change and the we're expecting more flooding going forward from a climate change perspective. So advanced drainage systems provide technologies for buildings to be able to build and account for that type of change in climate change. So it looks like WMS did lose a substantial amount of revenue in terms of earnings last year, negative 3.21 cents per share. Now that's an annual number, not a quarterly number. So yes, I do believe that is correct. As far as trading the last three companies as leaps, so Walter, I think that what you have to take into account, is the cost of those leaps more than anything else, right? So you can like a company fundamentally, you can like a company technically, but you still have to look at the cost of those leaps. What are those leaps cost? And the one thing that I want to help investors understand when it comes to buying call options is the fact that what you're buying with a call option is not just bullish exposure. What you're basically saying is you believe that the price of the stock will outpace the price of the call option. That's what you're really expressing when you buy a call option. So you have to look at, when you're looking at a leap, how much is that leap? How much is what is the break-even price of that leap? And ask yourself, do I believe this stock can outpace that break-even price by the expiration date? If the answer to that question is yes, then that is a thesis for buying that call option. If let's say you look at WMS, and let's say the break-even price in 2 years is 140, then you ask yourself, do I think the stock's going to be above 140 by expiration? If the answer is no, then you should not buy leaps on that stock, because again, a leap is not just a bullish expression; it's an expression that you believe that the stock will break out above its breakout level. I'm sorry, its break-even level on the call option. Gary, I'll take a look at that WMS EPS number. If you send me an email at info@optionsplay.com, I'm happy to take a look at that further for you. That may be an issue on that EPS number because stocks with a negative EPS should not have a PE ratio. You're correct on that. Any other questions? If there are no other questions, I just want to thank everyone for taking the time out here this afternoon, or this morning rather. What I'll do is I will send everyone a copy of the slides as well as a copy of the recording so that you can watch this on your own. I did get one question about PHO, which is the main water ETF. And that has a lot of the companies that we refer to in this particular ETF. So this is one other way that you can gain exposure to this segment of the market without picking individual companies. And if you look at the ETF, PHO divided by QQQ, it just underperforms the Qs. But we usually don't think of water as a very high performing growth sector, but the performance of this ETF actually outpaces the S&P 500. As you can see here, since the pandemic, PHO has actually outperformed the S&P 500. So this is an interesting one to pay attention to, especially as you expect infrastructure and industrial names start to outperform the S&P 500, as we're starting to see here over the past few weeks. This is one other way that you can gain exposure to this segment of the market without having to pick individual names or individual companies. Yeah, so the questions about not knowing some of these names, I tend to find that not knowing some of these names comes down to the fact that they're simply not household names, and many of them are also smaller type companies. But that is part of why we bring them up, is because these smaller cap non-household names are not well covered by analysts. So many times when you're looking at research, it's easy to find research on Microsoft and Starbucks. It's not easy to find research on some of these smaller cap companies, but that's why we look at these themes. We look at these larger problems that we believe that are going to uh, these larger problems that we see in the world, and the types of companies that are out there trying to solve these problems. And we try to cover a large spectrum of the big companies that service this type of industry, and there are plenty of them. But the big companies, generally speaking, they're not specialized enough to just do water. They usually have a small portfolio of water and a larger portfolio in other things. But then there are these smaller companies that focus just on this water problem. They tend to be smaller cap, but those are some of the riskier, but also potentially larger opportunities as well. So with that, again, thank you so much. And just a quick reminder and housekeeping. I am out next week, but I will be back here in on March 9th for our next Tuesday market outlook session. And I'll be back here on March 11th, the Thursday, to review the positions that we put on last night. So we put on a bunch of paper trading positions to help investors better understand how to track positions using OptionsPlay. So I'm really looking forward to coming back here in about 2 weeks' time to review those positions and just show you how those trades have gone, and think through the thought process as to how we can um, think through the thought process as to how we decide when we take profits, when we cut losses, when we roll a position, or when we're going to hold on to a position. So really looking forward to that. And I will send everyone a recording, not only of today's session, but also of last night's section, along with the positions that we put on, so that you can track them over the next 2 weeks while I'm out. So with that, thank you so much. Have a great trading day, and I'll see you guys here in just shy of 2 weeks.